potential problems with the BlackRock ETF? That's easy to trade $1 billion treasuries. We're leaving a debt burden to our children that's impossible for them to ever pay back. Have fun being a slave to the fiat Ponzi. Because if you measure Bitcoin in a debasing fiat currency, it's going higher. Bitcoin is 100% limited. Mathematics will prove that fiat debasement is 100% certain. If you understand math and you understand probabilities, don't miss this opportunity to participate in the greatest asymmetric upside return opportunity in a store of value asset that I've ever seen in my life.
Everybody is talking about the recent Bitcoin BlackRock ETF and whether it could potentially be an attack on Bitcoin. And it feels like there's even more uncertainty surrounding the 2023 banking crisis. The boomers, they're probably a little bit petrified of what's happening with their finances. So today I'm thrilled to be sitting down with the man who has over 30 years of experience trading billions of dollars of bonds. And today he's going to clear up all of the uncertainty in the world of economics for us. Greg Foss, it's such a pleasure to have you on, mate. Welcome to the show.
Sean, it's a pleasure to be here. Thanks for asking me, my friend.
So, mate, let's jump straight into the hottest topic that's on everyone's minds. That's the BlackRock Bitcoin ETF. Greg, are you bullish, are you bearish, cautious or optimistic on this BlackRock ETF, and why is this such a huge deal?
To answer very sincerely and in a short, I'm very bullish, and I don't believe the FUD actually reflective of the true risk. That being said, I'm never 100% certain about anything, except I'm going to get to my punchline in the first 2 minutes of our podcast. The only thing I'm 100% certain of is fiat debasement. Everything that I do in life is about mathematics and probabilities, expected value. You said billions of dollars of bonds. That's a flattering intro, but here's the truth. A good day, I would trade $1 billion. Okay, like on one day, I would do that. Not that I traded billions of dollars of treasuries. That's easy to trade $1 billion treasuries. But trading $1 billion of some esoteric credit instruments, that's more difficult. And you got to be right in the meat and potatoes of the financial markets to do that. I didn't do it on a regular basis, but I could certainly think about 4 or 5 days in my career that I traded over $1 billion of esoteric credit instruments. You need to understand, people, there is no certainty in financial markets, except, again, mathematics will prove that fiat debasement is 100% certain. And you can't argue with math, okay? Math is the base layer of language. It is 100% certain that fiat will continue to debase because of the debt spiral that we are in globally, not just individual countries. This is a global fiat phenomenon. I can worry a little bit about the BlackRock ETF and I could be like, all scared. Don't overthink things. There are potential problems with the BlackRock ETF, but if you hodl your own keys and you own the hardest asset ever introduced to mankind called Bitcoin, the math is on your side. Because if you measure Bitcoin in a debasing fiat currency, it's going higher because the unit of account is going lower. I don't know how to say it any more simply, you knuckleheads. You're not making money on your house, okay? Absolutely not making money on the value of your house. The value of a roof over your head has never changed, one iota. What has changed is the unit of account that measures the value of that account, that house, okay? Understand math. Mathematics. Not FUD, not, oh my God, BlackRock's going to attack the hardest asset. Why would BlackRock attack the hardest asset? To destroy any value that it accretes for itself? Think about the probabilities. Yes, it's not a zero probability, but it is not an attack vector that is planned. I need people to play probability analysis. Understand that it's a distribution of outcomes. where you have tail risks on both ends. But my God, you're supposed to play the most likely outcomes, not these tail risks. You can hedge against the tail risks, but don't go to the newspaper and say, I'm 100% certain about this tail risk that has, I don't know, less than 2% cumulative probability. You guys don't effing get it, okay? You just don't know how to manage risk. So that's my little pitch. Learn math, understand statistics. If you don't get grade 11 math, you probably missed the most important subject in school. So if you failed grade 11 math, have fun being a slave to the fiat Ponzi.
One of the things there, Greg, is I want to dive into the math because you've got an engineering background. But can you just break down for someone that's hearing the word fiat for the first time what that means? Because they probably think the currency that they're using, their dollars, is money, but it's not. So can you just break down fiat? And then I want to dive into the banking crisis that's currently going on.
Sure. You see this? This is a $20 Canadian bill, okay? Got a picture of the Queen on it. I think in Oz, you probably have a picture of the Queen somehow too, because you know we're both Commonwealth countries. So yeah. This is a $20 bill that is printed on paper and is actually debt. I need people to understand this has no value. It actually has negative value because it's attached to a debt burden of the country. So this thing isn't even worth intrinsically the paper value it's written on, it's printed on. There was a famous French philosopher, his name was Voltaire. He says that all fiat currencies eventually return to the intrinsic value of the paper it's written on. I will take issue with him. Very smart guy. This was around the 1600s or something. But he was wrong. It actually goes below the intrinsic value because it's not even worth the paper. What does fiat mean? It means trust. Trust me that this thing is accepted as a means of exchange. So in that way, fiat currency is valuable. It allows for people to, people can argue whether barter actually truly existed or if currency was really just a ledger system of who owes who what.
Yeah.
I won't want to go into that. There's a very great video by Wences Cesars. If you want to see true brilliance on stage at a Chicago gold conference, it must have been almost 10 years ago. He talks about how currency is really only a ledger. And if you use seashells as your currency, all that meant is somebody else owes you something. You brought home a buffalo and you had way too much meat for your own family. So you divided the buffalo up and divided it amongst your tribe. And the other person didn't have anything except they gave you some seashells, which meant you owed them something. It wasn't barter at the time. They didn't trade chickens for buffalo at time zero. They had this ledger account. Okay, what is fiat? There was a time up until 1971 where fiat was actually backed by something with intrinsic value called gold. And then in 1971, President Nixon of the United States took the United States off the gold standard. So now this fiat is backed by trust. Trust me, bro. Trust me that this is worth 20 units of something. In Canada, we call them dollars. I think in the US, I know in the USA, they call them dollars. I think it's Aussie dollars as well. I'm not positive. But in Great Britain, they call them pounds. In lots of countries, they call them pesos or, fractions of pounds sterling or francs or whatever. Guys, don't overestimate. It's a ledger. It's a ledger that is losing value because you can print as many of these stupid things as you want. In theory, seashells are at least limited. Seashells of a certain kind are limited.
Yeah.
Bitcoin is 100% limited, protected by mathematics and code. But why did gold attain a value as a ledger? because gold is scarce, not programmably scarce, but the reality is there's hundreds of tons and thousands of tons of gold in seawater. There will be a price of gold, which it makes sense to mine the gold out of seawater. But at current prices, the growth rate of gold is about 2% annually, which is almost a definition of it being somewhat scarce. Bitcoin's even better than gold. And don't confuse a fiat currency, which is a ledger, with a store of value, which is a savings mechanism. They can both exist. They can both coexist. But please don't confuse the use cases for either one.
Greg, I want to jump back and I want people to hold this thought about a store of value, both gold and Bitcoin, and how currency, fiat, has no value apart from being backed up by trust. But in this year, we've seen a lot of banks collapse. Is this banking crisis, has it finished? Is it over? Is it bigger than 2008? Or are we just getting started? What's going on here, mate?
Well, again, it's a probability. My sense is, so a little bit about me. I grew up in Canada. I'm an engineer. I appreciate mathematics, and I'm a decent engineer by math standards. I'm no rocket scientist, okay? I know what I know what I don't know. But I did, after engineering, I went to school in the United States for 2 years to do an MBA, Master's of Business Administration. And then I graduated as a financial engineer. But here's my point of reference. In 1988, when I graduated from school in an upstate New York Ivy League school called Cornell, there were 15,000 banks in the United States. 15,000. Okay? Now, contrast that with the attic of the United States, which is my country, Canada. We're a long, thin ribbon. We only have 6 banks. They span the globe, they span the country coast to coast. But due to different regulations in the two countries, like interstate banking rules and community banks and whatnot in the USA, there were 15,000 in the USA versus only 6 in Canada. Damn, that's a pretty big structural difference, right, between the two countries. Which is to say, though, Sean, today in the United States, there's about 5,000. Which is to say, in the last 35 years since I graduated in 1988, 10,000 banks in the USA have either failed or had to be combined with stronger balance sheet banks to work out bad loan portfolios. That's 10,000 banks in the USA that have disappeared in 35 years. What do you think the trend is? Well, in Canada, we like to think that we are 1/10 of everything that exists in the United States. All right. We're 1/10 the population. We're 1/10 the GDP. We're better than 1/10 of the hockey players, but at the end of the day, it's still, it's mathematics. So, and we're less than 1/10 of the good football players, North American football. But the point is 1 in 10 is a pretty good ratio to, which would imply if Canada had, and we still have, 6 to 10 national banks, depending on how you define it, how many should the United States have? Should the USA have only 100 banks? No, because of regulatory inefficiencies in the USA, I'm anticipating that the US will settle out with a banking system somewhere, dare I say, below 500, but above 100 USA banks, which means they're going to get a lot bigger. There's going to be a lot more concentration of risk in the US banking system. And most importantly, there will be an implied, and this is where it's key, too big to fail. The banking systems in both of our country are already too big to fail. Any one of the 8 national banks in Canada are too big to fail. The government has an implied backstop on any one of them because the contagion to the remaining 7 banks would be so severe that it would cause the rest of the banks to fail if the government didn't backstop the banking system. How do they backstop it, Sean? With the ability to print money. So banks, which are levered 25 times to their equity capital base, that's the leverage of a common bank, which is to say their risk-absorbing capital is 4 cents on every dollar that they lend. That means they lever their risk-absorbing capital or equity 25 turns. See, that's how you create money, is through the banking system. So the banking system is the fiat Ponzi transfer mechanism, which is to say banks in the United States will continue to consolidate or fail or get what's called a take under. And in USA in the last 2 months, there was a amalgamation of 2 California banks, PacWest and Bank of California, where Bank of California took over, in air quotes, took over PacWest at a price that was under the trading value on the open market of PacWest stock. See, they had to do that, and PacWest had to accept the take under, not take over, take under, to combine 2 weak balance sheets into something that was more robust by eliminating duplicity in the system of banks. Get rid of all the back office of one bank, you can increase the profitability margin, etc. But now you have 2 zombie banks merged into one that eventually will be acquired by another bank because it still won't survive, okay? It's that simple, but that is what the banking crisis in the US is right now. A group of take-unders or failures or forced mergers at the expense of the weak bank and to the benefit of the acquiring bank that's orchestrated by the government, like, the strong USA money center banks. If you need any example of that, look to the European amalgamation of Credit Suisse and UBS. The shareholders of UBS didn't want this to happen. The government basically forced it to happen, and now they just transferred the risk of a very ailing, over-levered Credit Suisse to the balance sheet of UBS, orchestrated government maneuver. I'll go out on a limb here and say it'll be 5 years before UBS needs a takeover of itself, or its own takeover, I should say. Pretty simple mathematics, people. When you're levered 25 to 1 and you overtake a bank, or you combine with a bank that's way over levered, it actually pulls your capital ratios down and makes you a more risky institution. Even though the government said, well, we're going to cut you a sweetheart deal. We're going to make sure these bonds called alternative tier 1 capital bonds, AT1s, are going to get written down to 0, even though the equity, which is a subordinate claim on these bonds, didn't get written down to 0. You see, it's all orchestrated to maintain the fiat Ponzi. So that's where we are. And banking is ubiquitous. There's no difference between the risk in banking in Australia to the risk in banking in Europe to the risk in banking in the United States or North America. Every single bank is taking a commensurate amount of risk, because if they weren't, no one would buy their bank stock. They'd all move to the other bank stock that is providing a higher return on equity as measured by an ancient formula called the DuPont analysis. So I know I'm getting a little deep under the weeds here. I'm a math guy. Learn your math, okay? The DuPont formula. I encourage you guys to look up what that means, which is essentially your return on equity is driven by your return on assets multiplied by something called a gearing ratio. And the higher you can get your gearing ratio, the higher you get your return on equity until everything goes kaboom. Don't be fooled. That's how simple it is.
So a question for you, Greg, is you said it doesn't matter whether it's the fiat Ponzi scheme in Canada, US, Australia. Say if the fiat system in America hypothetically collapses, is that going to roll over to Australia, Canada, to the rest of the world, or is it going to be isolated?
Hell no, not even close. Okay, so very simply, Canada. Now, forgive me. I don't mean to be rude, but I'm pretty sure Australia is not even a G7 nation, right? Are you guys part of the G7?
G9 possibly.
Yeah. So here's the funny thing: Canada's part of the G7 because we squeak in as the 7th largest economy in the without including Russia and China. We're gonna fail 1 decade at least before the United States fiat fails. That's Canada. So using that measurement, how many years before Canada fails is Australia going to fail? I'm asking the question. You don't have to answer, but the reality is a couple of years probably. So you guys are toast before Canada's toast, and Canada is toast a decade before the US dollar is toast, but ultimately they're all toast, okay? It's math. Don't argue with math. And the US dollar is very simply the best looking horse at the fiat glue factory. Okay? It's that simple. They all stink. But the US dollar will be the longest to survive because it's part of the strongest economy in the world, with the strongest military in the world, with the deepest capital markets in the world. Everyone who's a bull on US dollar is because they hate other fiat currencies more. It's like, hey, you're the best looking leper at the leper colony. Like, fuck people. There's no glamour in being a fucking ugly leper, okay? But that's what the US dollar is. So, it's the best looking leper at the leper colony, or the best looking horse at the fiat glue factory. I don't care. I understand this, that fiat is a relative measure. Cross-currency rates on fiat are always a relative measure. They're all going down. It's just a question of which ones are going down at a faster rate than the stronger ones. But they're all going down.
And I think it's like 2 weeks ago, we saw Fitch Ratings just downgraded the US credit ratings from AAA to AA+. How does that come into the equation here? And does that matter for the average person in regards to this conversation, Greg?
Not because the average person is too stupid to understand what it means, but to people who actually understand what credit ratings imply, it's not the fact that it was downgraded, it's the trend. And if the governments didn't have the ability to print money to satisfy their debt obligations on maturity, or even the growth of the interest expense on their debt, if they couldn't print money, I promise you they'd be rated CCC, which is at the lowest end of the credit quality spectrum, because their interest coverage ratios reflect a company that is a zombie. They don't even have interest coverage ratios after you subtract out fixed costs like entitlements and military spending. They don't even cover their interest expense one turn, which means every time they roll over debt, a portion of that debt that's getting rolled over is because of the interest they couldn't pay on the prior debt. The definition of a Ponzi, people. Okay, how simple is that to understand? When you can't even pay your interest expense on your credit card, you have to get another credit card and assume that the banks or whoever is going to grant you that credit card, so you can use that credit card to pay not the balance. I need to be very clear. Not the balance, just the accrued interest on your prior credit card. That's government debt. Do you not understand the definition of a debt spiral? Because you better. And if you don't, and you don't care, you failed grade 11 math, your hair is probably pink, and you probably have no clue how global financials work, global financial markets work. I'm sorry.
Yeah, so let's transition this into talking about what countries are mining Bitcoin at the moment, and when Putin might start pricing his energy in Bitcoin.
I love it, brother. I mean, look, I'd only be speculating that he would be the first one, but I'm almost 100% certain he wants to do it now. But will he be the first one to do it? I'm talking Vlad Putin pricing valuable natural resource energy, Russian resource energy, oil and natural gas in Bitcoin. As an engineer, it's simple to me. Bitcoin is digital energy. The first law of thermodynamics says that energy can neither be created nor destroyed. Why then wouldn't you price your valuable natural resource energy in digital energy? Why would you price it in, imagine if this was a US dollar, why would you price oil and natural gas in US dollars when the United States can print as many of these as they want? Essentially, US petrodollar system grants the USA the ability to print energy. Okay, now hold on. The first law of thermodynamics says energy can neither be created nor destroyed. But the fiat Ponzi system allows the US dollar to apparently print energy. No, it's called entropy. I don't want to get too much into it. The point is this: that is a leaky system that eventually fails. Leaky systems, like in hydraulics, you know that a leaky hydraulic system doesn't work, it fails. Well, that's what fiat is, a leaky hydraulic engineering system. So, is it going to be Putin? Imagine if it was Saudi Arabia that absolutely went off, off the rails and said, that's it, I'm done with the US petrodollar. I don't know who it's going to be, but my bet is it will be somebody who is sick of living in a world where the United States can essentially create energy because of their printing press. Don't sell valuable natural resource energy for a worthless piece of paper. Oh, and by the way, as Vlad Putin experienced, if you store your reserves in US Treasury assets, the United States can freeze those as well. What a system. Don't you think it's a reason why the United States has supremacy over the global economic system? They have all these advantages that are built in. And eventually there'll be countries that say, no mas. I'm not going to allow this. It's not fair for my children and my citizens to operate in a world where a trading partner like the USA has such a material advantage over the first law of thermodynamics. Okay? Mathematics, law of thermodynamics. Wake up, people. These are natural laws. Fiat is not a natural law.
How interesting. I think one of the big draw cards here is we saw Russia as well go to Bitcoin when the US started imposing these sanctions. So it would be very interesting whether it's Russia or Saudi Arabia to start pricing. That would absolutely be amazing. So then if countries are starting to use Bitcoin, you get a lot of grief from the Bitcoin community for your allocation of your personal portfolio into Bitcoin. For me, where you are in your stage of life, I think that's maybe even a little bit too much, but because you understand it so much, I think that's fair and a great allocation. But someone that's just hearing this conversation for the first time, or they haven't put in the 100 hours, I want you to dive into what your allocation is into Bitcoin, potentially into gold, real estate, anything else that you're interested in, and maybe where people should start finding out information, because it's a complicated subject. And maybe touch on why does it even matter? Now, we've sort of touched on a little bit with Bitcoin to have an allocation, but if you can dive into all of that, Greg, for us, I think that would be very helpful, especially for boomers watching.
What a great question. But there's a lot there to unpack, okay? So I'll be very honest. Look, I'm turning 60 this month. 60.
Happy birthday.
Cheers, my friend. But I'm not happy about that. Damn, 2/3 of my life is over. Like, that's statistics. That's a high probability that at least 2/3 of my life is over. And I want to leave this world a better place than when I arrived. But as it stands now, if I were to kick the bucket tomorrow, the world is not a better place today than when I arrived 60 years ago. I believe a lot of that problem is the fiat money system, and those that are closest to the money printer are incented to make the system even worse. So how you get senators in the United States that have spent their entire career, Senator Warren, let's say, for example, has spent her entire career in politics, and she's worth $69 million. And she makes $250,000 a year. Man, do the math. Someone has some inside information or not a competitive advantage that the rest of the world doesn't have. But let's take that out of it. I have a 40% allocation to Bitcoin. I'm 60 years old. I have 3 kids. I like hard assets. So I do own silver. I do own gold. I own a lot of real estate. And when I say a lot, as a percentage of my portfolio, and I own a bunch of Bitcoin. But truth be told, I own more real estate than Bitcoin. Oh my God, you're not a fiat maxi. Okay, look, I'm not. What I am is a fiat minimalist. So I like hard assets. But the truth is that Bitcoin has the greatest asymmetric upside opportunity of any investment I've ever seen in my 35 years. Another way of saying that is you don't have to be 100% exposed to Bitcoin to capture its upside and still enjoy the other pleasures of life, like having a roof over your head that you don't pay rent on, that you can live in with your family as a source of family bonding and shit like that, okay? And you can call me, oh, he's not a true Bitcoin maxi. That's fine. Again, my risk parameters and my age is different from the 25-year-old whose net worth, no disrespect, because I was 25 at one point in time, is probably 1/100th of what mine is. See, that's what you get after working for 35 years. You actually get a net worth that's meaningful versus a 25-year-old kid. By the way, I advise that 25-year-old kid to be 100% invested in Bitcoin. I'm not telling him not to be, or her. I'm just advising that everybody has different risk parameters for the family that they've grown up with.
Yeah.
And 40% is good by me. Why? Because you don't need to be 100% in when you are 60 years old. And I don't own Bitcoin for myself. I own it for my children. But I also believe in other hard assets, as I've said. What I don't believe in is bonds. And by the way, I traded bonds for over 30 years of my career. Bonds are the worst soft asset, fiat Ponzi instrument that I've ever seen. And why is that?
Just quickly on that, aren't bonds meant to be the safest asset in the world?
Only if you're an idiot. So they're meant to be that if you drink the Kool-Aid and believe that there's something called a risk-free return, when in fact all you're doing is lending money to the government at time zero. You lend $100 to the government at time zero, and in 10 years, you're highly likely but not certain to get your money back in 10 years. But the value of that same $100 is far less in purchasing power than it was at time zero. So you've earned a coupon over the time, but it's nowhere near enough compensation for the debasement of the currency because of money printing, because money printing is 100% certain. The only way they can ensure that the bond market keeps rolling over. It grows bigger and bigger, but they need it to roll over. So right now, for example, the United States has $32 trillion worth of funded debt. You can go to usdebtclock.org and you can see in real time in the top left corner of that really cool screen how much debt the USA has. The year's 2023, the Congressional Budget Office, CBO, says by the year 2033, 10 years from now, the USA will have over $50 trillion of funded debt. Well, this doesn't just materialize out of thin air. There has to be buyers of this debt, but which means if they're buying the debt, they're not investing in other things. So it's an actual, they're stealing from markets outside of the US Treasury market, demand from markets outside of the US Treasury market. So, okay, show that slide. And here's the cool thing, Sean. So there's your 32 trillion, top left corner. Please go. So the word I was looking for was crowding out of other debt. Go to the bottom right-hand corner. Down a bit. Expand that screen. Do you see that number right there that says $192 trillion? $192 trillion. These are liabilities that the USA owes its citizens that hasn't not funded yet. Holy Mother of God. There's $192 trillion worth of debt and Social Security and Medicare packages that the US citizens are counting on that hasn't even been brought to market to fund it with money. Holy shit. It is so over, it's not funny, because we can't even afford $32 billion, let alone $50 trillion. And the real bill is $50 trillion plus $192 trillion. Do you guys get this? Like, seriously, are you that stupid that you don't understand that it's over?
Well, I don't even know if people are stupid here, Greg. I just think when you look at these numbers, they're so overwhelming and so scary. It's easier to put your head in the bloody sand, to be honest, mate, and just forget about all of this.
Stupid. Yeah, that's a stupid response. Forgive me, okay? I'm a trader. I'm used to trading for mentality.
Of course, yeah. So I guess the question is, because this is so complex and people aren't willing to put in the time, and 40% of Bitcoin allocation seems a little bit hard. But where should they start? Like, I know you've got an education company. How can they go from being stupid, because it is stupid to put your head in your sand? You're absolutely
I
fucked
apologize. Yeah,
if you take no action. So how can people go from a place of ignorance or a place of where this is so freaking complicated? The world economic system is fucked, man. Like, it takes years and thousands of hours to understand it. Where can they start? And maybe even talk about looking glass education if you want to go into that, mate.
Sure, man. So thanks for that lob, we call it a lob ball or a fat pitch so that I can swing the cricket bat, but we don't really play cricket here. We play baseball. So you lobbed me a fat pitch that I can take a swing at. So first of all, education is absolutely key, because they cannot teach you in high school how the system works, because if they did, people would be like, well, why in the heck do I store my money in a bank? Like, isn't that so risky? And the answer is, yeah, it's actually very risky to store your deposits in a bank, because the bank can fail, and does regularly, because the system is too leveraged. But they don't teach you that in high school. So where can you go? Well, I'm partners in a platform called lookingglasseducation.com. One of your countrymen is a great friend of mine, Daz Behan, at Daz Bea, 1A or ampersand DAZBEA with a 1 after it. He lives in Western Australia. I know it's a big country. I know you're down here and he's up here, sort of, west versus east, but I know it's a long way away. That being said, he's a great partner. He's a very good contributor to this platform. There's 2 other partners that are so key. One who is a lady from Colombia who lives in Boca Raton, Florida. And she's responsible for creating a book called Mi Primer Bitcoin, or a program, a diploma called Mi Primer Bitcoin, My First Bitcoin in Spanish, that are teaching kids in El Salvador and all around the world how to use Bitcoin. So, it's a process that you have to rely on platforms external to the traditional education system. So shout out to Daz Behan at Dasbea1. A shout out to Dahlia Platt from Boca Raton, Florida, by way of Colombia. And then my good friend Sebastian Bunny, lives in Whistler, Canada. And those three people are helping to educate the world as to the realities of the global financial system. It's not easy. And why Bitcoin is the solution. You say 1,000 hours. I found Bitcoin in 2016. And I'll bring two things in here. I found Bitcoin in 2016 and the price was under $1,000 US per Bitcoin. And since 2016, I would estimate that I put in far more than 1,000 hours of studying of Bitcoin. And guess what? I still don't know all there is to know about the beauty of this digital ledger. Trustless, which means there's no intermediary that you need to trust to transfer value across time and space. I've learned about the fiat system in my trading days, but they didn't teach that to me in school. Like, they don't teach you the reality, because again, if you're a MBA finance and you realize that the system you want to work in is built on a house of cards, you start questioning the system. So you have to learn it by sitting in the pits and trading and seeing these financial crises that occur on a regular basis throughout the system. So 1,000 hours is way light, Sean, which means most of the people in the world won't even do 1/10 of that, which is 100 hours. So what we try and do is via podcasts like yourself, the only wrong allocation to Bitcoin is 0. I'll let you guys decide what your right allocation to Bitcoin is based on your risk parameters, based on your understanding of the fiat Ponzi, based on your risk tolerance level. That's going to be a personal decision. But just don't own 0. If you own 0, you're actually taking more risk than if you own a proper portfolio allocation, which is up to you to define. Mine is 40%. Other kids 40 years younger than me, they're like, I'm at 100%, Grandpa. And I'm like, good on you, kid. You have no children. You don't have a house. You like to smoke pot and sit in your parents' basement, and you keep all your savings in Bitcoin. Rock on. That's probably a pretty smart risk allocation for you, but it ain't the same risk allocation for different people along the risk spectrum and age spectrum. I don't know if I've said this. I've given so many podcasts, so forgive me if I'm repeating myself. I was lucky enough to find Bitcoin in 2016, right? Did you know that Bitcoin's actually a better risk-adjusted investment today at 30,000 than it was when I first got involved at under $1,000? And you could say, wow, how is that possible?
Yeah.
Okay, go.
How is that possible?
Because we have certainty. We have the COVID crisis that prior to 2016, we had no idea that governments were going to print so much more money. Okay? We have the certainty that the system is stronger than ever. Bitcoin computer network, computing power, strongest computer system in the world. TikTok next block, it's written right on your over your right hand shoulder. These are the things you can point to and say, yeah, okay, check. Yeah, okay, price on a relative value basis. It's actually less risky, better value. If you think you're too late, you don't understand how to do risk analysis, but many people in the world don't, right? Like, humans are horrible risk managers. Humans will sell their winners and harvest their losers because they hope that the losers in their portfolio somehow return. When in fact, the best portfolio managers in the world get rid of their losers and harvest their winners. Humans will sell their fire insurance at a profit even though they see the fire coming across the valley approaching their home. But they're going to sell because, God damn, I just locked in a profit. Oh yeah, but you're going to lose your home now, and you don't have any fire insurance. Who's the idiot in the equation there? So Bitcoin, I like to say, is an IQ test in risk management. And plenty of people are failing that IQ test. And that's really a shame, but it's not surprising because humans naturally are horrible risk managers.
I think you said it really well. I know you're really good friends with Jeff Booth, Natalie Brunel, but also the guys from Swan Bitcoin. Swan Bitcoin have this tool that you bring up all the time, and I checked it out.
Oh
It's
yeah.
going to take a long time for me to work through, but I'll put that in the link below. Can you just talk about what that asset allocation application is and how it can be helpful for people that are starting to listen? 46 minutes, that they're really starting to think through. So for everyone watching, I applaud you for getting this far. It's an extremely complicated topic, but you need to hear about it right now. So Greg, can you explain that application? Because you talk about it all the time and it's incredible.
Yeah, so my hat goes off to the developer of this tool. He's a Brazilian who spent a long time on Wall Street. His Twitter handle is Alpha Zeta. He's actually the CIO, Chief Investment Officer at Swan Bitcoin. His real name is Hoffa, or excuse me, yeah, Hoffa, spelled Rapha. So Hoffa, if you were to pronounce it in English like Rafa, but he's a Brazilian kid that created NakamotoPortfolio.com. And that risk analysis tool is one of the most brilliant things I've ever seen in my career on Wall Street and Bay Street in Canada for analyzing portfolio returns relative to the risk of that portfolio, measured by volatility of the individual portfolio constituents, as well as their asset correlations, meaning some of the assets have negative correlations, which is to say when one asset is increasing in value, another asset is going down in value. And when you combine the two, it actually mitigates the portfolio risk. So yeah, there you go, NakamotoPortfolio.com. You can run portfolio analytics there. Go ahead, Sean. It sounded like you had something to...
I was just going to say, because it's so in depth, like they've really put hours and hours. This is a very professional modeling system. I just encourage everyone to go through and spend the time if they are starting to get serious about their financial future. This is a great tool. And I've also spoken with Stephen Lubka and done a podcast. So that's one of the guys from Swan. People can check that out. But Greg, I want to switch this up again. Something that really hit really hard is your granddad served in both the world wars, World War I and World War II. He instilled in you that freedom is not free. When you said that, I really felt it. But what did you mean by that? And thank you very much for your granddad for serving, for freedom.
Oh, thank you, my friend. It actually means a lot. I'm looking in my office here. I actually have a picture of his, I'll see if I can show you it quickly. You guys see that picture of a medal on the wall?
Yep.
That was his, something called the Order of the British Empire. It's awarded to soldiers from around the world for honor and bravery in battle. My granddad was one of only 800 non-British citizens to be awarded the Order of the British Empire for his service during both world wars. So my granddad was a pretty cool guy. But he served and risked his life on a daily basis to preserve freedom. And that he instilled a certain, what would I call? I'm a little bit of a rebel. I'll speak out. Well, a little bit, but that's a little bit because of my granddad, right? Like I could tell you a story that would make your blood, your veins go cold because of the risk that he was involved in a dogfight. So he was a fighter pilot. Now I won't go into the story. I'll just tell you though that freedom is not free. I mean, freedom is because of all the young men and women who sacrificed their lives to fight against tyranny against aggression, against ideologies that don't embrace freedom of thought, freedom of speech, freedom of expression, freedom of investment. So freedom is a lot of different things, but I will tell you that freedom is not free, which means you take it for granted that you can go out on a street to protest and you can dress up as a LGBTQ. I'm fine with that. But don't take that right and abuse it because you think that it wasn't built on the backs of people that sacrificed their livelihoods and their lives in certain situations. So I need to be very clear. My belief system may be different from yours, who's ever listening. If you agree that I don't have to agree with you, as long as you don't have to agree with me, that's fine. That's freedom. You can have your own points of view, but it's not built on something that was granted. It's built on hard-fought gains. And so, yeah, I say that. One of the guys that I went to school with at Cornell in 1986, 87, 88, he died in the World Trade Center in New York in 2001. And I mean, a horrible, horrible event that some conspiracy theorists may say one thing about it. You're fine. You can say whatever you want. All I know is that day was a horrible, horrible reminder to myself that there's people in this world, whether they're your own government potentially or some foreign institution that doesn't agree with your thoughts or your principles or your beliefs, to invoke a horrible toll on otherwise freedom-loving and worshiping people. You can talk about D-Day invasions. You can talk about the Australian contribution in World War I, which was unbelievable. I just want to respect the people that have made the ultimate sacrifice to allow my kids and hopefully my kids' kids to grow up in a world where you're allowed to say you don't agree with somebody. I mean, look, I love the fact that not everybody thinks alike. There's a famous general in the United States, General George Patton. He had a great expression that I love. If everybody is thinking alike, then somebody isn't thinking. And we don't want to be a bunch of robots. We actually want to have opposing views and work out what the best system is. And generally, I believe the best system is freedom and capitalism. It's not perfect, but as Margaret Thatcher said, I believe as Maggie Thatcher said, capitalism is the worst form of governance, except for all the other forms of governance. And I believe that. And so, thank you for bringing it up. I mean, my granddad was, a decorated World War I and World War II fighter ace. He had plenty of friends. We didn't talk about it. He was a very private man. He had plenty of friends, I'm certain, that, met their end on any given day. And they were doing it to defend, for my kids and your kids too, Sean, a semblance of not having to live under a anarchistic or whatever type of government that, is trying to overthrow the world.
Absolutely. So your Twitter says Greg Foss for the kids. Does that tie into this? What's for the kids?
Yeah, for the kids, Bitcoin basically, because I feel as a 60-year-old white guy, overweight, so I'm fat, I'm white, I'm reflective of the generation that has probably caused as much damage to the fiat system in the history of fiat. We pull forward or pull gains that should accrue to our children in the future. We pull them to our present to allow us to live a more soft life, a a luxurious life without giving the sacrifices that, let's talk about my granddad or that gave in their generation. My generation is very selfish, and we're pulling forward to the present gains that should accrue to our children. Another way of saying that is we're leaving a debt burden to our children that's impossible for them to ever pay back, which means we're burdening them with our selfishness. And so when I say for the kids, I own Bitcoin for my children. And when you're 60, you got 20 years if you're lucky, 30 years if you're really lucky. Most likely 15 years, right around there is my, but I'm not going to sell my Bitcoin. And you guys could say, he's not enough of a maxi. Okay, you're 25 years old. You have 50 more years in your life. 50 versus 15. Okay?
Yeah.
Understand the difference. I applaud your risk-taking prowess. You want to roll the dice or put it all on black? Go ahead. You're allowed to do what you want to do for your life. I'm just going to live my risk spectrum a little differently, and I don't give a fuck what you think about me. I'm doing it because I'm doing it like I want to do it.
Doing it for the kids. Greg, you're an amazing man. People need to check out Looking Glass Education. I'll put that link below, as well as your Twitter. What would you like to depart with? What's your final message for people watching? And before you get into that, you're 40% allocation. I'm about 95% allocation. As someone at your stage of life only goes 1 to 4%, I think that's amazing. So anyone that's saying, Greg, with 40%, fuck off. Wake the fuck up. Anyway, Greg, this has been a pleasure. What's your message for everyone that's been watching?
I thank you for that little pitch, Sean. And I want to thank you before we go about everything you're doing. I don't know how old you are, and I don't care. I absolutely care, but I'm not going to, make it an issue. Congrats. If you found your risk allocation that allows you to sleep at night and be comfortable with the future, which I totally get, everyone is their own person. Everyone's their own man. Or woman. There is a risk tolerance level that's optimal for every single individual investor in the world. I just need to go back and say, if you understand math and you understand probabilities, don't miss this opportunity to participate in the greatest asymmetric upside return opportunity in a store of value asset that I've ever seen in my life. Okay. I have 4 more minutes and it'll be about an hour. My price target on Bitcoin is over 2 million US dollars per Bitcoin. I'm not going to tell you, oh, by the way, and that's in today's dollars. That's not in future dollars that have been debased. That's in today's dollars. I'm not going to tell you the time it's going to get there, but I'm more confident in that prediction than I have been in a lot of other investments that I've made good returns on, because it's mathematics. See, the beautiful thing about Bitcoin is it's pure mathematics. There's no subjectivity to it. So anyway, I'm signing off from Canada saying, don't own zero. Please do your homework. Own some Bitcoin as protection, insurance against the eventual unraveling of the fiat Ponzi. Because it'll happen in stages around the world, with weaker currencies failing first, and then eventually it'll be a G7 nation, probably Canada. I hate to say it, but if Canada fails, Aussie has already failed, or it's very close to failing, because we really don't matter. I hate to say it. Both Aussie and both Aussie and Canada, we're rounding errors, guys. We don't matter in the global economic system. So we better purchase insurance against the unraveling of our own economies and our debt burden. That's called Bitcoin, the most perfect hard asset ever created by mankind. And we have the luxury of buying it at a super cheap price. So, signing off. Thanks for having me.
Act accordingly. For everyone watching, Greg, this has been a pleasure. Check out this video with Peter Dunworth. He's talking about a $7 billion Bitcoin. It's going to be absolutely amazing. So dive into that one. Also, the allocation of Bitcoin. Greg, such a pleasure. Everyone
Thanks.
watching.
Can I just say one? I love Peter Dunworth. I'll just say, I'm not sure. Does he have a $7 billion per Bitcoin price target? $7 billion?
Yeah. Yes,
Okay,
sir.
that's fine. All I'll say is I respect his model or his mathematics, but it has to get through my price target before it gets to his price target. So once it gets to my price target, I'm going to reevaluate the information and see whether it can get to his price target first. But don't overthink things, guys. Hats off to Peter. Keep doing the good work, Oz. We're going to win. We have to win for the children. Rock and roll.
Let's do it for the kids.